Right now, global markets are tilting on a knife's edge, and every headline is rewriting the playbook for what's about to come next. Japan's bond market is flashing a full-blown crisis mode siren, and central banks are flooding the system with fresh liquidity, fresh cash to keep the economy's engine running. Meanwhile, Bitcoin just torched another round of whale shorts, meaning everyone betting against Bitcoin's success got liquidated, they got wiped out. Bitcoin is roaring back above $109,000. And this is leaving traders on both sides asking themselves, does this squeeze fuel a breakout, meaning Bitcoin's gonna go higher? Or is it a reversal for a downturn lurking around the corner? If you want to know where the smart money is moving before it's on the news headlines, this is where you need to be. Welcome to my show, guys. I'm so happy you're here. Hello from Las Vegas. Today, we're decoding global pressure points, exposing the market signals nobody else is watching. We're gonna connect all the dots, and we're gonna reveal how these macro shocks are setting the stage for Bitcoin's next chapter. So don't wait on the sidelines for the crowd to catch up. Every episode here gives you the edge. It's real-time data, and I present you with the context that you need in order to see the big moves before everyone else does. If you're ready to play offense when everyone else is still stuck reacting, you came to the right place. I'm so happy you're here, and let's get into it. Okay, so let's kick off with the big picture, because right now the global economy is feeling a little bit like a pressure cooker. First, we have Japan, the world's third largest economy, just sent a signal that everyone needs to pay attention to. Over the past few days, the Japanese government bond yields exploded. They've exploded upward, jumping a full percentage point to more than 3%. That's an unusually sharp move. A bond yield, as you would know, is basically the interest rate the government pays to borrow money. When yields jump fast, it means investors are demanding a lot more in order to lend their money. And this usually is because they're worried about risk. So if the Bank of Japan, or their central bank, now owns half of all government bonds, and we know central banks buy up bonds to keep interest rates low and stable, hoping that this will somehow support their economy. But after buying so much, Japan has more or less boxed themselves in. If they pull back, yields can jump even higher, which makes it much more expensive for the government to borrow. So to bring some balance to the economic situation, the Japanese government is reaching into their, think of it as their rainy day fund. And they're rolling out billions of dollars in relief money just to manage the fallout from US tariffs to calm their market down. It's a sign that behind the scenes, things aren't as steady as they might seem on the surface. And there's another metric that's really telling. Japan's debt to GDP ratio just broke above 260%. That number compares all the money the government owes to the size of the whole Japanese economy. And for some context, that's nearly double the US level. And it's the highest among major economies. If you hear that debt to GDP ratio is rising, it means the country is piling on more debt in comparison to, or in contrast with, what it produces each year. And it's hitting households too. Japanese wages are dropping in real terms, which means people's paychecks aren't stretching, especially once we factor in the rising prices. Meanwhile, food and living costs are spiking as well, and the economy is actually shrinking again. When you hear real wages, that's just the value of someone's pay after you subtract inflation. But it's not just Japan that's stepping in. China has just pumped $53 billion into their system to boost growth. When you hear about these big injections of cash, think of it as the government adding more money to the economy, hoping businesses will borrow and spend more and keep things moving. Meanwhile, here in the US, deficits are ballooning. The government is now spending much more than it brings in, and this gap, called the deficit, has reached nearly 9% of the size of the whole US economy. Running a deficit isn't unusual, but this is a massive one, especially if you consider it's going on outside of a recession or war. And at the same time, the US dollar index, which tracks how strong the dollar is compared to other currencies, just dipped below 99 for the first time in months. This signals that investors might be feeling a little less confident in the dollar. And to add to this big picture, there's now 7.2 trillion sitting in US money market funds. A money market fund is basically like a giant pool where people park cash to keep it safe and earn a little interest while they're waiting to see what is going to happen next in the economy and where they should put their money. When this number surges, it's a sign that people are playing it safe and that they're uncertain and that they're waiting for the next big move or big obvious sign to tell them what to do next. But now let's zoom in to what's happening with Bitcoin itself and what the data is saying about where things are heading to next. Momentum right now for Bitcoin at the institutional and corporate level has never looked stronger, actually. And the signals coming in are impossible to ignore. A major headline this week is Trump Media's group reported a plan to raise as much as $3 billion with the stated intention of adding Bitcoin to its treasury reserves. This kind of move would put Bitcoin directly on the balance sheet of a household American brand, which sends a signal to boardrooms and executives everywhere. The ripple effect of a deal like this could be enormous for mainstream US corporate adoption. And it's a sign of just how rapidly the landscape is evolving. And on the corporate front, Strategy, Michael Saylor's company, continues to lead by example. Their latest purchase totals 4,020 Bitcoin for $427 million, executed at an average price of $106,237 per Bitcoin. This is not a speculative, one-off buy. As of now, Strategy controls an astonishing 580,250 Bitcoin, worth well over 40 billion in today's prices, accumulated at a blended entry cost far below current market values. This level of accumulation, spread across multiple tranches over several years, has transformed their company into a kind of institutional Bitcoin vault in many ways. A model that's increasingly getting the attention of other corporate treasuries, and behind the scenes, on-chain behavior shows a powerful pattern. Long-term holders are quietly taking more and more Bitcoin out of circulation. In just the last 20 days, these wallets have absorbed 300,000 additional Bitcoin, removing supply from exchanges. All at the same time, short-term holders, those more likely to sell on swings, are sitting at multi-month lows for spent coins. This means there's been a shift in their attitude, with less speculative churn or rotating of their cash, and much more of a conviction-driven holding or hodling of their Bitcoin, which historically has set the stage for major up price movement. Institutional money isn't slowing down either. Last week alone, digital asset inflows hit $3.3 billion, and the total asset under management for crypto investment products have reached a new all-time record at $187.5 billion. This shows growing participation from pension funds, insurance companies, and endowments looking to diversify against fiat risk and tap into Bitcoin's role as a potential digital reserve. Momentum from governments and major corporations is growing as well. Several countries are studying new legislation to support crypto holdings, and a growing number of Fortune 500 companies now mention digital assets in their earnings calls and strategic reports. In an environment where inflation, deficits, and liquidity injections dominate every macro discussion, Bitcoin is quickly moving from an outsider asset to a mainstream reserve. It's a powerful foundation for the next phase of Bitcoin's evolution. And it's happening in real time, guys, right in front of us. So let's dive in to what's happening on the Bitcoin chart, because the price action is setting the tone for the whole market, and it always does. We're seeing a wave of big moves across spot, futures, and on-chain data, all pointing to fresh momentum and rising dominance for Bitcoin. First, the price has risen back above $110,000. That's a level that's getting a lot of attention right now. But the real story is what's building beneath all of this noise. When taking a look at the futures markets, the liquidation map shows that if Bitcoin climbs, if Bitcoin reaches $120,000, more than $6.1 billion in short positions would be forced out of the market. When so much leverage is built up like this, it creates a setup where even a small move higher can quickly cascade into a much bigger rally as shorts scramble to cover. And this tension is showing up in the data. Take buyer volume, which is essentially the amount of market orders aggressively buying up Bitcoin. It's spiked, showing that buyers are stepping in with urgency. That's usually a signal of strong interest from bigger players, and it's often seen near inflection points when the market's about to move. Overall, crypto investment flows just hit another milestone. Last week alone, 3.3 billion moved into digital asset funds, pushing total assets under management in crypto to an all-time high of $187.5 billion. This level of capital flow tells us that institutions, funds, and everyday investors are still moving into the market, even with all the volatility. Another big trend is Bitcoin's growing dominance. When we look at how altcoins are performing relative to Bitcoin, we see that the altcoin BTC pairs just notched their lowest weekly close of the entire cycle. In plain English, this means money is rotating into Bitcoin as people are scouring the market for stability and strength during this time of market uncertainty. There's also an eye on what's coming next. I'm currently going to be attending the annual Bitcoin conference in Las Vegas. I just got here, that's why I'm a little tired. And history shows that price action right after this event can be a key signal for the next phase in the cycle. Many investors watch for fresh trends and new momentum to emerge as announcements settle in. All the signals are lining up, guys. Bitcoin is flexing its strength, big money is moving in, and every chart says we're right on the edge of something major. The next move could trigger billions in liquidations and rewrite what we think is possible for this market and Bitcoin's new all-time highs. So that's a wrap for today's video, guys. I hope you gained value and have a sense of where we are right now in the market. If you haven't already subscribed to my channel, I hate asking you guys every time because I know many of you are regular, which I appreciate so much. You have no idea. But for those of you who are new, I would encourage you to subscribe because that tells the algorithm that people like my content, and it promotes my content. It helps me grow, which encourages me to make more content. And then it's this beautiful flywheel effect that helps me bring you more and more news and better information. And soon, once the market kicks off, we'll start to get into more altcoins, but when it's time, and only the good ones. That's my commitment to you, because I absolutely want you to be safe out there. Crypto is like a giant battlefield, you know, where there's like explosions everywhere as you advance. And so it's very, very important to know who you're following and to follow the right path. So anyway, guys, I love you very much, and I'll be back here tomorrow with another video. And take care, and yeah, catch you guys in my next video. Ciao.